Hey, Sovereign Wealth Builders, Simon Dixon here, and welcome to another episode of Simon Dixon Hard Talk Live. If you were on Bitcoin FinTwit, then you would have known that the story around Jane Street price manipulation really blew up the social media and the X platform. So there was so much misinformation, disinformation, and also some revelations. And you know how I do things. I don't do hype. I don't do half truths. I do the truth as I see it. So we're going to be digging deep. And you know that I don't do propaganda. And you know that I don't do things in half measures. So we're going to be understanding the different operations from both a macro geopolitical perspective and how it relates to the Bitcoin price suppression operations. And we're going to be answering the questions of the most commonly held accusations, and we're going to be going through it. So you know that if you are a long-term listener of Simon Dixon Hard Talk Live, that we've been talking about the Wall Street attack vector and how the price has been under siege as a result of the construction of financial weapons of mass destruction by the proof of weapons network, particularly in the financial industrial complex. So we're going to be diving deep into all of that today. The main episode is called Bitcoin Under Siege. We're going to be going through price suppression. We're going to be going through the Jane Street accusations. And we're also going to be going through more revelations around developer infiltration. In fact, revelations that nobody has discussed. I reached out to my early contacts in Bitcoin, and we're going to be going through that. So we're going to be breaking a lot of that today on Simon Dixon Hard Talk Live. We're going to break this down into two parts, and we're going to jump right in very soon. Part one, we're going to be discussing Jane Street, and we're going to be discussing its war on the Bitcoin price and the accusations. And then once we've covered that thoroughly from the perspective of the main accusations, as well as the different types of operations to put this in context of the wider geopolitical issues and wars that we're experiencing right now, in part two, I'm going to be interviewing Amir Taki, and we're going to be revealing his actual contact with Jeffrey Epstein, what he revealed about people that actually went to the Epstein Island. And we're also going to be talking about his perspective and my perspective on different Bitcoin developer infiltration attempts. So I'm looking forward to sharing that with you. And without further ado, let's go right through the main content, which is part one. Jane Street's attack on the price of Bitcoin. Right. So as I said, there were lots of allegations. And if you were on Twitter or X, you would have seen them. And they went viral and everyone was just copying and pasting each other's accusations. It really kicked off with Jason Belcher's article, where he really dug deep into the Jane Street accusations and laid the framework for some of the things that I'm going to be discussing here today. But we've had a little bit of time to look into it. And this is going to be an ongoing thing, of course, we're going to be discussing. So let's go through the different types of secret trading techniques that basically the allegations were that they would use these secret trading techniques in order to oppress the price of Bitcoin. Now, because Wall Street has constructed these different Bitcoin derivative complex, Bitcoin treasury companies, Bitcoin ETFs, and the whole complex that I've been warning people about, including the Bitcoin treasury companies, the accusation was that Jane Street has been accumulating Bitcoin shares, i.e. ETFs, and then been using them to dump them in seconds to crash the price. So they would buy them in a very managed way. They would dump them very, very quickly in order to crash the price. And then they would profit from shorts that they would put. And they would do those shorts through some of the derivatives. And so they'd use an arbitrage, essentially derivative contracts and Bitcoin ETF. And because they have special advantages in terms of access to ETFs that we're going to be covering today, that would be the mechanism by which they could actually cause the price to crash, because they're able to effectively, in a short time zone, naked shorts. Naked shorting, for those not familiar, it means if you want to go short and profit from a stock price going down, you need to borrow somebody else's stock, and there's a whole stock lending industry out there with prime brokerage and investment banks. And if you're like a high net worth individual or an institution, you get access to prime brokerage services where you can borrow these stocks with the hope that you'll be able to buy it back cheaper later if the price goes down, and then you can settle that stock. And so the person on the other side that has stock that wants to hold it long term, they receive an interest rate for lending you their stock. And you effectively profit if the price goes down, but the longer term investor doesn't really care because he's just going to be holding it for the long term, and then will receive some interest that they can use in order to accumulate more Bitcoin shares. And so there was another accusation that every single day at approximately 10 a.m., there would be a manipulation, and it would be an algorithmic manipulation. And we saw this because there is a case in India where Jane Street is basically under attack by the regulator. And we were wondering whether the same thing has been happening here. And so Jane Street made approximately $4.23 billion. I'm not sure that will net out to after cost and all of their interest and all the various other hedging costs. While it led to a temporary ban by the securities regulator in India and the Exchange Board of India in order to ban Jane Street from performing such activities. So there is a regulatory intervention, not inside the US, but outside the US. And we also saw similar things that were alleged in both China and South Korea. And so outside of US, there has been such allegations, which has led to a ban. Now, whether those are still bans or not, and what the outcome is a little bit uncertain. But we know that there has been regulatory bans. And so what is the allegation? What is the exact mechanism for oppressing and manipulating the price of Bitcoin? So Jane Street, as one of the most profitable institutions, as a private company, it's not a public company, so there's no disclosure other than what it needs to disclose as a private entity. It is also constructed opaquely as a partnership. And so in order to become a partner of Jane Street, we don't know exactly how that works. But the assumption is you have to bring a lot of money with you. And so it is an elite club that effectively, remember we talked about compromise networks, that you can probably compromise your way into if you hang around in these elite wealthy circles. And so there's no accountability to outside investors. I'm assuming it's proprietary trading. So it's the house trading its own book, and it has insider access to pipelines of the financial plumbing that other people don't have access to. So its history has been one of accusations around high frequency trading and various other things. But so the first step is to have billions of dollars, and most people don't have billions of dollars, and they have access to it as well because it's their proprietary money. The second accusation is that they would then buy spot Bitcoin, so they could buy it on an exchange. So let's say they got an account with Coinbase, they can buy spot Bitcoin. They will buy it at approximately, let's just say $68,000. I believe the live price right now is about $64,000. We've had a bit of a correction. So they would buy spot Bitcoin, and then they would open massive shorts via these options or various other derivatives. And so the money needed to purchase the spot is unleveraged, but the money on the derivatives is leveraged and done through derivatives. So if the price goes down, they make a lot more money while losing money on the spot long purchase, but making more money on the short trade. And so then they would sell large amounts of Bitcoin in minutes in a very, very quick period of time via algorithms. And then they would combine this with low liquidity moments when liquidity is the lowest. And they would also combine it with FUD campaigns, fear, uncertainty, doubt, negative news, and they would trigger surprise selling. So, for example, you could coordinate it with the release of a campaign to say that Bitcoin was created by Jeffrey Epstein, for example. Or you could coordinate it with a campaign that old school Bitcoiners are selling their Bitcoin. And then maybe this crashes the price in that moment to approximately $62,000. So you got a $6,000 hedge or profit that you've made on your short derivatives. You then offset the long position, the loss you've made on the spot. And you would then close your shorts for a very large profit if you could do it at scale. And so you're just losing about 5% on the spot, but you're making significantly more on the derivatives trade. Then what you would do is you would effectively repurchase the Bitcoin spot again at the $62,000, and you would squeeze the shorts, and you'd create some kind of FOMO campaign, fear of missing out campaign, in order to push the price higher. So you're adding to your Bitcoin position and you're crashing the price as it goes down. And so with your profits, you're ending up with more and more Bitcoin, and you're able to take more and more Bitcoin out of the market from those that are panic selling on the news. Now, remember, if you watched my interview last week, I was sharing my experience as a market maker. These are the exact type of things that we would do when we're ended up in these naked short position. And then we would go to the compliance back office and they had to go find the trade. And we would run these long-term naked short positions. And you could do that because as a market maker that was my job. You don't get the same level of disclosures because your commitment is always to have a bid and an offer at the same time. Now, when you combine that with large proprietary traders like Jane Street, and they make sure that they get certain access, these operations are possible. And so they can then open a massive short position again as the price is going down. And then they can just rinse and repeat and do this time and time again. This is basically what they were doing, or the accusations are around what Jane Street was doing in India with certain stocks. And through this mechanism, they basically had $560 million frozen, and it's held in a escrow account with the Indian regulator, the SEBI. And the manipulation case is basically ongoing as we speak right now. And I said, there is different cases in China, in South Korea, but nothing in America. We had to wait for a lawsuit. So the question that we're attempting to answer today is there something about Jane Street that makes it not under investigation in the US when it is under investigation in other countries? That would imply that there is some kind of connection to a higher level at the financial industrial complex. And remember, the financial industrial complex has access to military industrial complex, which is subordinate to it, which also has the quote unquote deep state, MI6, Five Eyes, Mossad, CIA operations. And so through these different blackmail operations, if you are in that class of the financial industrial complex, then you may be able to get special protections. And therefore, you could be a part of covert operations from those where the government is subordinate to them. So we're going to look into that today. And I'm going to share never shared stories that I was actually saving for a book that I was writing as some of these operations were happening as well. I dug it out, and we're going to be pulling some of these things together. And then the second thing I'm going to be asking is, if they have a higher level of protection, are they able to short-term and long-term oppress the price of Bitcoin? And what does that mean for us? More importantly, there's no good understanding this stuff if you can't do anything with it. So I'm going to end with exactly what you can do with it. And then we'll move over to part 2, where we'll be going through some of the other operations like developer infiltration and various other things. So who is Jane Street? Well, it is in fact the most profitable trading firm on earth, as far as we know. Unless there's some covert one we don't know about, and there very well may be, but the most profitable trading firm that we know of on earth. In 2025, its performance was $24 billion trading revenue in just the first 9 months of 2025. $25 billion. That's $10.1 billion in Q2 2025 alone. So what happened in Q2 2025? How does that relate to some of the things? Well, we'll look into that. But that is the largest quarterly trading revenue ever recorded on Wall Street history that I'm aware of. That is more trading revenue than Goldman Sachs in basically a comparable period in its comparable proprietary trading department since the Glass-Steagall Act has broken down and they were able to, separate out commercial banking, retail banking, investment banking, wealth management, and proprietary trading. Proprietary trading is where you're trading the house's money, as opposed to an asset manager that is managing other people's money and therefore has much greater fiduciary duties. And so this is a level of black box that we saw during the infamous first bailout of long-term capital management. A hedge fund, a market maker, a proprietary trader, an interdealer broker that has all of these different plumbings and access to high-frequency trading. It was actually had larger revenues than JP Morgan's trading division in the same quarter as well. So this is the top of the top. This is the creme de la creme. And it's been responsible, allegedly, from the data that I could find, for 10% of all North American equity trading volume. So 10% of all the volume in the most liquid market in the world in equity trading in America. Now, what else do they play in? Well, they are completely dominant in the ETF market. And by market, I mean market making. I described last week in my interview what I used to do as a market maker. Effectively, you make a market. And you use all the tools that you're allowed to use in order to make those market. They also have a global quantitative trading powerhouse. So they have access to very high levels of algorithms. Perhaps they're using access to Aladdin data, which is BlackRock's artificial intelligence. They have a derivatives infrastructure firm. So they actually are involved in the infrastructure of some of these constructing these structured products. Whether they do them in-house or they do them in partnership with various investment banks is very opaque. But most importantly, it's a private company with very little disclosure requirements, and they have a very big hidden element to them. So this implies that there is a level of protections. As a market maker, we were able to do things that normal market participants aren't able to do. That's because Jane Street is what's called an authorized participant. And where are they an authorized participant? So when you apply to have a Bitcoin ETF, you need to have somebody, an external party, managing, so whenever you buy a shares in a Bitcoin ETF, it has to be backed by the underlying. But every 24 hours that settles, and there is a settlement process where there may be more shares than there is underlying Bitcoin. And so you need one of these appointed participants in order to manage that in an independent fashion. And so where is Jane Street an appointed participant? Well, they're an appointed participant in much of the ETF plumbing. The ETF is the exchange traded funds, because you want to have access to an asset class without buying spot Bitcoin, which is actual Bitcoin. And you want to do it within your 401k, your retirement fund, or your brokerage account. You do it via an exchange traded fund. Their job is to give you a share that represents Bitcoin. And then they go and hold the Bitcoin in custody. And they work with these appointed, these authorized participants in order to make sure that that's always matching up. But there's always a delay and a lag where you could end up with more shares than Bitcoin. Does that create an exploit? Well, let's look at the founders and who's actually involved in it. It is very, very opaque. So we know that Jane Street's founder is a guy called Robert Graneri. And so being stereotypical, and sorry, it sounds like an Italian name to me, but he's accidentally there was an interesting story when I was doing some research for this story. I was like, what can we do that makes us understand whether there is any deep state connections? And so we always follow the money. Now, I did find one particular transaction. It's not damning in itself, but it starts to paint a story. Because the founder, Robert, he accidentally wired, I found a transaction, $7 million for basically purchases of AK-47s in order to do a Stinger missile operation of RPGs on purchases for basically a resistance and a coup and an overthrow of the South Sudan government. Now, we've covered Sudan many times on Simon Dixon Hard Talk, and you can go to my blog and find that. But essentially, you have a coup, you have an internal conflict, you have RSF, which is a force that's backed by UAE, and you have another force, which is SDF, which is basically backed by Saudi Arabia and Egypt. But it was an internal struggle from CIA covert operations historically. Now, I believe that after we resolve and America exits the Middle East, we're going to have resolutions around that because we're going to be handing over some of these covert operations. I won't go too deep into that. But it went to the South Sudan government. And, it didn't go to the South Sudan government. It led to the coup forces to overthrow the South Sudan government. Now, he says that he thought it was some kind of humanitarian aid contribution. And we know organizations like CIA fronts, like USAID, National Endowment of Democracy, are utilized in order to exert some of these covert operations. And we know that elite billionaires are used if they have special access to certain bank accounts like BCCI, JP Morgan accounts, the Vatican bank accounts, some of these Swiss bank accounts like Credit Suisse, that they are often put into these leverage compromise games where they have to contribute. So the coup essentially was, it implies that it could have been some kind of federal asset here. And it is possible. It's not conclusive, but it paints a bit of a story. What else does point a story? So whenever, I used to run a regulated financial institution. I also used to work in investment banking. And whenever there is suspicious transactions, you have to file suspicious activity reports. But what's interesting in this one, we don't know whether there was a SAR filed. We wouldn't get transparency on that. But there were no charges. And basically, he just went back to trading afterwards, and the founder did that. So I asked the question, could Jane Street be an intelligence front for covert financial industrial complex operations? Now, if you're a long-term listener or you're new, this may be a little bit overwhelming for you to, take in. But I wanted to just make sure that you understand this. So I'll catch you up. We cover every single week the different operations that happen, and we follow the money so that we're not listening to the media, so that we can forecast geopolitical events, macro events, and also how we protect ourselves at the micro level, given all this transition to a world of AI, central bank digital currencies, and stable coins, and various other things. So are these, I call the financial industrial complex a FICK, are these FICK's operations, are they above the law? Because we know that there are operations that are above the law. And so I'm just going to cover 3 operations before we go deep into the Jane Street and then the particular allegations around silver and Bitcoin so that we can dig deep as well. So just so that you're up to date and you understand how these operations work, I'm just going to go based upon previous discussions, 3 quick operations. I want to remind you, we've covered it many times or historically on Simon Dixon Hard Talk, the LIBOR scandal. And so the LIBOR scandal, for anyone that doesn't know, is the London Interbank Offered Rate. Effectively, it's a benchmark interest rate that was used by banks disclosing the rates at which they were lending each other and doing different operations. And they would take an average rate of all these major global banks And when they were borrowing funds from each other, or they were writing various derivatives contracts, or engaging in foreign currency exchanges, they would publish all this information to LIBOR, and the average would be set, and this would make a rate. And that LIBOR rate in London was very important. Now, it was very scandalous at the time once there was a whole revelation. But it was administered by the British Bankers Association, the BBA in the UK. And it became essentially the reference rate. This is why it's so important. For if you were taking out a large corporate loan as a large, corporation, LIBOR would be used in order to set the rate. It would be an amount above LIBOR. It would also set the rate of adjustable mortgages. So in the case of the UK, you tend to get 2 years where you can fix the interest rate on your mortgage, and then you have a 30-year mortgage, which is adjustable rate. And so your interest and your mortgage repayment and the rate that you pay would be based upon LIBOR. It also set a part of the derivatives complex. So when large financial institutions are looking to swap their exposure to different currencies, they would take out interest rate swaps. And LIBOR would be used in both currency swaps and interest rate swaps in order to set and fix some of those interest rates into longer term loans and products. It also was a vital part of the euro-dollar futures, which is the plumbing between the European and American relationship, where European banks get to create euro dollars, and then they use these futures contracts in order to increase the amount of dollars within the European banking sector. All combined, it is basically trillions and trillions of dollars of contracts executed through derivatives globally. The entire derivatives market, some estimate, is many multitudes greater than the entire GDP and entire debt of the world economy. Some estimate it to be like a $600 trillion market. But we don't know, because a lot of them are black box over-the-counter contracts. And so we don't even really have this data. And so at the time, the controversy was that we were told that these are regulated institutions, and the regulators have got taken care of it. But within all of these banks, they would have internal traders, and those internal traders would provide the data. The data would be provided to the British Bankers Association, then the BBA would publish it, and then it would be used as the LIBOR rate that would set many of these contracts. And so the banks realized that they could just act as a cartel, and they could have, take some of these hard and large derivative positions and manipulate LIBOR, and just quite frankly lie about the data by manipulating some of these positions. And so what they would do, it was found through emails at the highest level of reporting, through a plausible deniability exercise, they would request their colleagues within the bank to submit LIBOR to slightly higher rate, up or down, depending on the coordinated goal across this cartel. And so that some small basis points would basically change almost, billions and billions and millions of dollars of profit and loss for these banks. And so leading up to the global financial crisis, you could use this in order to hide some of the exposure and make the banks look more solvent than they actually were. Now, the banks didn't really care about the global financial crisis because they'd fully co-opted the government, they'd co-opted the Fed, they co-opted the central banks, and they were able to just socialize the losses, privatize the gain, and concentrate their power in the end. But banks were fined for this operation and this behavior. They were fined. The banks that were fined were Barclays in the UK, UBS in Switzerland, RBS in the UK, Deutsche Bank in Germany, JP Morgan in the US, Citibank in the US, and Rabbit other ones as well. And so both transatlantic, UK, European, American cartel of banks, that many of them are the shareholders in the Federal Reserve System, and those central banks would be connected into the Bank for International Settlements as well. Now, the total fines exceeded approximately $9 billion globally, but they made significantly more out of it. So all this to say is that there are opaque practices within the higher levels of the financial industrial complex that allows for this internal plumbing. And also, we've seen many revelations within the high frequency trading environment where regulators just can't really keep up with this stuff. And then if you have higher level of intelligence protections, you're able to make those problems go away, or you can just pay the fine and do the crime, and it makes more money. First operation. Going to go through two more as well, just to make sure you understand that these things happen all the time. If you haven't been watching, you would have known, if you're a long-term listener, that we've been sharing what we think will happen next in Iran. And we were talking about Operation Ajax. Now, we had a confirmation from Scott Bessent, who's the I think he's the Treasury Secretary under the Trump administration right now, used to work for George Soros and was managing the crash of the pound during the euro-pound crisis as well. And I believe has been brought in order to do multiple currency operations and covert operations, as well as strategically weaken the dollar for the financial industrial complex, my long-term thesis that I think we're seeing. Now, Scott Bessent on an interview recently confirmed that they have been destroying the Iranian currency leading up to the protests. And so all of those protests, which had Mossad infiltration as well, were a currency war. And this is what's always happened. This has always happened across the Dutch Empire, the British Empire, the American Empire, preceding a government overthrow, and some of these operations as well. And so the original one was done by MI6 and CIA to replace the democracy in Iran with a dictatorship, and to install the Shah so that essentially Iran's oil would be used for British petroleum and later American interests. And that built up to everything that's happening today. But it was originally called Operation Ajax, and recently we had Operation Ajax 2.0. And Scott Bessent effectively confirmed that they did a covert currency war on the Iranian currency to destroy the savings of average Iranian, create an inflationary cycle, and also increase the price of goods and destroy people's savings so that they could agitate civil unrest as part of these operations. So the question is, when Scott Bessent does this at the government level, who sits above? Because who's going to benefit from Iran and all of their resources? Well, of course, it's the financial industrial complex, which also has access to military industrial complex, technical industrial complex, deep state operations, and through lobby are able to determine and set government policy. And so they need partners within hedge funds in order to execute these operations. So what banks did they use in order to make these transactions? And what hedge funds did they use, and what derivative products were used? All open questions. We don't have the answers to that. We know who they used in previous operations. And so my assumption is that these operations still exist today, obviously. Now, the third operation, I just want to help you understand because it relates to things that are happening today. And then we're going to go deep into Jane Street, silver, Bitcoin, and then what you can actually do as well. The third operation, if you haven't researched it, is the infamous Iran-Contra affair. So Khamenei, I always get confused. Khamenei was the previous supreme leader in Iran. Now you have Khamenei. Khamenei was brought in because he had exile within France. And they were working on their nuclear program, between France, Israel, Iran, various other things. But during and leading up to that Iranian revolution, you had Khamenei come into power. Some people speculate, because he was in exile in France, that there may have been some covert operations. And we have seen with Iran-Contra affair that at times Iran, Israel, and the US have worked together in various operations. And one of those operations was the Iran-Contra affair. And this is all documented history. And basically, there was a staged or real, whatever you may think, or a pushed for hostage operation in Lebanon, where essentially Hezbollah, via the IRGC, would take some hostages. And it was negotiated that after this hostage taking, that there would be a release of the hostages, and that was in exchange for a weapons swap. And so hostages for weapons were swapped, and that created effectively the covert cover story and the plausible deniability around whatever happened to those weapons. Now, what we also saw in the Iran-Contra affair is that US would send money to Israel. They still do to this day. Then Israel would spend it back into Lockheed Martin, General Dynamic, Raytheon. That props up the dollar. And if Israel can create war in the region, then it supports the stock price of those military stocks. And you have to, in order to agitate, you engage in covert operations to create religious tensions, recruit armies. And we've covered this many times in the geopolitical section. And so Israel would purchase those weapons from the military industrial complex in the US. And then you would use the CIA, Mossad, MI6 in order to funnel some of that money through the banks that were able to perform these operations within the financial industrial complex. In the case of Iran-Contra affair, it was all done via Credit Suisse in Switzerland, a Swiss bank. And they would use a shell company, and that shell company was connected to the beginning of Jeffrey Epstein trying to make his name. This is around the time when Roy Cohns and Charles Kushner was Jeffrey Epstein before Jeffrey Epstein, and Jared Kushner was married into the Trump family via his daughter. And so you had these entities that were involved in these weapons trafficking via Iran-Contra. Now, we know that different operations that we've seen in the past and we've covered through even just declassified documents. We know BCCI was an infamous bank that was used for these operations. We know that the Vatican Bank has been used. We know JP Morgan was the banker for Jeffrey Epstein. They settled their case, about 285 million. We know Deutsche Bank also settled for their involvement in the Jeffrey Epstein affair as well. But then Iran would essentially have a faction within the IRGC that would launder this money via mafia networks and various connections and get the weapons back to, in the end, these Nicaraguan Contras in Central South America. Now, I don't want to go through the whole thing because it's not worth doing it. We've covered it before. But once you've got those weapons and you support those militias within Central South America, they would then be used in order to support covert regime change so that America could overthrow governments, install a dictator, and then bribe them in order to take their resources and use them for American corporate interests, prop up the dollar, and create war. And also, they would fund their black op operations via drug trafficking routes, human trafficking routes, weapons trafficking routes, sex trafficking routes, and various other things. And so these were, the types of militia operation that we cover all the time. Now, if you're wondering whether this sounds interesting right now, given the fact of what's happening right now in the world, what is happening in the world right now? Well, we've got war with Iran, which is imminent, and I've shared my thoughts on where I think that goes. We've also got an explosion between Pakistan and Afghanistan, where the Taliban was there, the Taliban receive US money, billions of dollars a year, in order to allow the drug trafficking routes to continue. Then it goes in via Mexico, and now there is escalation with the Mexican drug cartels all at the moment right now. So that's why I never take these things seriously, and I always look at it through following the money rather than the narrative, and why I put together my thesis. But anyway, I believe that this is still happening right now to today. And we know this, you'll get the evidence in 10, 20 years from now, but we have to speculate in real time. So all this to say is that these operations exist. We cover it every week. Make sure you subscribe if you want to understand these types of things so that you can understand how the world really works so you don't fall for the narrative and we follow the money. Right, now let's get into the specific operations. Now we know that these financial industrial complex FICK aligned covert operations exist. And we know that there is a level of financial infrastructure that receives a layer of protection and the government is subordinate to that power structure, as we're seeing from the cover up at the moment. So is it possible that Jane Street is one of those chosen hedge funds? It could be. With the all of these different types of things, I can't give you categoric evidence yet, but it implies to me that this would be a top candidate for one of those hedgies that would be involved in covert operations. Now, what does the financial industrial complex want to do right now? I believe it's turning America into a regional power, splitting the world up into multipolarity, and exerting various different financial weapons of mass destruction to infiltrate and vassalize various countries so that they can launch their ETF global empire. And one of the things they're trying to do is vassalize Central South America deeper into the financial industrial complex and also open up Iran for their market. So you've got that narrative. Now, in that, we've talked about suspected operations to break the Japan carry trade, break the euro dollar, break the peg to the dollar pegs and the petrodollar. We also talked about the commodities boost. So we saw, starting right before Christmas last year in December, the silver short squeeze operation. And at the same time, simultaneously, Bitcoin was put through an accumulation operation. We're starting to see lots of inflows away from retail investors into institutional investors. I believe that this was a very successful operation to try and get institutional ownership of as much Bitcoin and squeeze out the retail ETF investors, just like I used to do in market making previously when I worked at the investment bank. And we also had the silver trade. Now, somebody is on the wrong side of that trade. So what have we actually seen? Could Jane Street be responsible for this silver short squeeze operation? So is Jane Street a financial industrial complex member? Highly likely. We've already covered different types of stories that might connect it to intelligence. We also know that as a result of the silver operation and short squeeze, that the largest holder of silver ETFs right now is Jane Street. We also know that the largest holder of IBIT, so SLV is the large silver ETF. We also know that the largest holder of IBIT, which is BlackRock's Bitcoin ETF, is guess who? Jane Street. And so we know that they have most likely undisclosed derivative positions, as they are a private company and we don't know what those positions are. Now, we do know through the public company disclosures of the ETF that Jane Street is the largest holder. So we have one-way transparency, but we don't have two-way transparency. Now, many people, I was warning everyone against Wall Street and Bitcoin. I was saying there's nothing we can do to stop it. But you need to understand, when they build this derivatives complex, they're going to control the short-term price of Bitcoin. And many people were violently opposing these things, calling me a conspiracy theorist and various other things. But now people are starting to understand it. Right. So how did they get that very large position? Is it because they are just bullish on Bitcoin and silver? Or is it because they've been using their privilege as an authorized participant AR in both SLV and IBIT? And so have they been able to create and redeem these ETF shares? Yes, that's what their position is. So when IBIT or SLV ETF want to create new units, they use Jane Street as one of the authorized participants in order to create new shares. And then there is a time frame by which they have to cover. And so there is an arbitrage in between. And it's not transparent and it's opaque. And it's typically large banks or broker dealers that perform those functions. And so they can, in that moment, arbitrage the price of the Bitcoin and silver ETF versus the number of assets, which is known as net asset value. And so if you have more shares in that moment than assets, there is an arbitrage difference between the net asset value and the price of the ETF in that moment. And nobody would know, with the exception of those that are insiders. And so let's dig a little bit deeper. What is the architecture that was built around Bitcoin? I shared, from Operation Choke Point 2.0 and all the different Bitcoin operations that we've been covering. The Bitcoin supply is obviously spot Bitcoin, i.e. Bitcoin in self-custody, Bitcoin that you own where you own the key. There's only ever going to be 21 million of those. And that is enforced by a network of miners, node operators, developers, and the ecosystem that will never change that 21 million cap. And so you know that there's only ever going to be 21 million Bitcoin. That is what's unique about Bitcoin. With gold, you can mine some more, but historically it's only increased at a rate of 2%. With silver, you go through this, this process of refining the finished product, and it relies upon flows and mining companies, and it has industrial usage as well. And so they're always looking to discover more of the components to make up silver as well. But Bitcoin's price is not like it was when I first got involved, where there was a couple of it's not done on chain. So when you trade in a peer-to-peer network with a fixed supply where you own the private key, you can send that to anybody. But what sets the price? The price is set by exchanges. And so we had the first exchanges, and the price isn't set on chain. And so initially we had, price discovery by these various exchanges setting up. In part 2, when we do the interview with Amir, we will actually share experience from some of these initial exchanges and their infiltration attempts as well. But initially it was just spot exchanges. What does that mean? They say you deposit some Bitcoin at the exchange. They show you when you log in that if you deposit a Bitcoin, you have a Bitcoin. But they hold the key. So you don't know if you actually have that Bitcoin unless you try to withdraw it. When you withdraw it, you know you have the Bitcoin because now you have the private key. But they could create many times more IOUs saying we owe you a Bitcoin when they may not have the Bitcoin. And the entire history of Bitcoin, we've had exchanges that did that, and they went bankrupt when people tried to claim them all. We had a run on the exchange. But initially, the price is set through spot exchanges. And so through that mechanism of creating databases on top of the blockchain, there is the opportunity to manipulate the price short term as well. It doesn't last forever, but it does last. Then we had Bitcoin derivatives complex that was constructed. It was initially created within our industry. So we had exchanges like Kraken, Bitfinex, BitMEX, and many others that came later. They were the early ones that would build all these different types of derivative contracts. So now you had Bitcoin, then you had the exchange balances, and then you had all these derivatives on top of it. So first they were created by us for investors, for the industry, and there were many, many different types of exchanges. But then when Wall Street came along, they started constructing their paper Bitcoin financial industrial complex. Early exchanges were like Layer 1 and various other ones. And we had the Commodities Mercantile Exchange, CME. They created various futures contracts, and those were cash settled. What that means is that they would be backed by Bitcoin, but you didn't, if you had a futures contract, which is, the ability to claim on Bitcoin at a future price, you didn't get Bitcoin. You would receive cash. So they'd have to sell the Bitcoin if they had the Bitcoin and cash settled. And it doesn't even engage in the Bitcoin market as well through these cash settled futures, which creates the opportunity for manipulation. They also had offshore perpetual swaps in various different jurisdictions with various different levels of regulations. I remember Goldman Sachs came along and started opening up the options market, the right that, but not the obligation in a contract to acquire Bitcoin. You got put options and various other different types of call options if you want to go long or short. But round about 2024 into 2025, we had the rise of the Bitcoin spot ETF. That means that the ETF, the exchange traded fund, is unleveraged, and there were leveraged ones where you could take out, 2x ETF and various other things. But it had to be backed by Bitcoin, and it had to be held in custody, so it wasn't cash settled. And leading up to that, or prior to that, we had Operation Choke Point 2.0, where there was a deliberate infiltration under the Biden administration through the financial industrial complex in order to crash various players in the Bitcoin ecosystem based upon what looks like an operation to completely discredit and create systemic risk across lots of fraud that was happening and was effectively allowed to happen at various levels. Now, with these Bitcoin ETFs, Coinbase is the main custodian. You have Fidelity as well. Fidelity is one of the largest asset managers. You have BlackRock, State Street, Vanguard. Fidelity is one of those, and is also a custodian like Bank of New York Mellon as well. But you have a service called Prime Brokerage, and Prime Brokers effectively find you Bitcoin so that you can lever up and create these structured products, derivative products, and they work for hedge funds. Coinbase launched this Prime Brokerage service. You also have on-chain types of things, like where you could put some Bitcoin in custody with BitGo, and then it would give you a token called a wrap Bitcoin on the Ethereum blockchain, and then you could engage in DeFi contracts. They also had things like, all of these different things. All this to say is that once this derivatives complex was built, there is speculation, and the audit requirement is very hard because it wasn't regulated to the degree where this is fully audited, where one Bitcoin might be the backing of several of those contracts. And this creates the paper Bitcoin market, where now you have more Bitcoin than exists. So let's say 13 million Bitcoin right now is held in private keys. About 4 million of them are lost, and then you've got 3 million. There's only 1 million left to be mined. And then you've got another 3 million that are on exchanges or within this, financial industrial complex and custody relationships. Some of those might have multiple claims. And so you might have 8 million paper Bitcoins on top. Now, a paper Bitcoin is not a Bitcoin because you have to settle in the end. And it's only in times when you run on the exchange, or you have an issue with derivative contracts, or people start to question, do they have those Bitcoin, that the need for self-custody Bitcoin. And then we heard that, for example, in a Michael Saylor interview recently, he said, I don't know if it's true, he said that financial institutions trying to, borrow, to basically get access to Bitcoin and pay very subpar rates as well. And so there is speculation that somebody's trying to cover these positions. We don't know. We don't have transparency on this information. But there is a kind of vector. When the banking system blew up and everyone realized you need gold, you want cash, and then the IOUs had to be bailed out, you have something called basically, you got total return swaps, all these different structures, notes, all these different types of products. But by having the ability to create more Bitcoin than actually exists through these paper contracts, it can be used by market makers and hedge funds in order to get unfair advantage. And so when you have companies like Strategy, I talked about Michael Saylor, that firstly create a simple product for issuing equity and holding as much Bitcoin as possible, and then going out to the debt capital markets, those that want to lend to Strategy, where he would pay a fixed interest rate and then use that money in order to buy Bitcoin. And then he would set up more speculative products that would pay dividends. And then he would borrow against this Bitcoin and then also closed out some of those loans. Well, we had the construct of the Bitcoin treasury company and credit products, where the more he borrows, the more he becomes subordinate to his bondholders and his equity holders and his corporate debt and his need to pay these dividends. And that creates a centralized attack vector for the more he borrows, the more Bitcoin he can put within Strategy. Now, that actually has an effect of taking Bitcoin off the market, because to this date, Strategy hasn't sold their Bitcoin. And so on the up cycle, that created a lot of upward pressure on the price. At the same time, what else was constructed? Well, we had the introduction of Cantor Fitzgerald via Tether that said they're going to be holding the US treasuries for the stablecoin Tether. And then we had the introduction of JP Morgan, where Jamie Dimon said he hated Bitcoin. Then suddenly JP Morgan would start constructing financial products. And they started to push Bitcoin-backed loans. And then Cantor Fitzgerald started to push Bitcoin-backed loans. What does that mean? It means they want you to give them your Bitcoin, hold it in custody, and then they would mine some fiat currency. And if the price of Bitcoin crashes below a certain point, they would sell the Bitcoin, which creates cascading liquidations, or they'd call you and you'd have to deposit more Bitcoin if you had more Bitcoin, effectively allowing you to lever up. And then exchanges would do that and create derivative products as well. And so you can build the ability to effectively take everyone's Bitcoin that is levering up their Bitcoin, either via trading or borrowing against their Bitcoin. And you can centralize as much Bitcoin as possible, accumulate as much Bitcoin as possible through strategy on the way up, but also through Cantor and various other products on the way down. And so that's what I've been warning people over the long term, that what Wall Street would be doing. And this doesn't last forever because you have to cover these contracts as well. But this creates in all moments what's called a systemic float ratio. So SFR, which is the ratio between real Bitcoin versus paper Bitcoin. Now, we don't know what that is because there's no transparency on the market, but I do believe they created significant paper versions of Bitcoin in the last cycle. And now I remember everyone saying, yeah, the adults are in the room right now, or some simps for the financial industrial complex. And you remember I had that infamous argument on Spaces where I lost my rag around some of the Zios and various other things, and some of the Wall Street sympathizers, where I was saying, no, you've replaced the amateur market manipulators with the real market manipulators. And so you will still get volatility. They were saying, no, it's going to be a mature asset. It will steadily grow and various other things. No, I said, I've always been used to Bitcoin volatility. It's awesome, for accumulating a Bitcoin, allowing people to get in. And once you've developed the conviction, if you do what I've always been telling to people ever since Bitcoin was $3, own more Bitcoin this month than last month, regardless of price, you effectively become an investor. They do the market manipulation, and this used to be done at the exchange level with the insiders, and you don't need to worry about what the insiders are doing. Don't try and sell the top or buy the bottom and various other things. Now, they were saying that when Wall Street comes in, this will be eased out and you won't have the corrections. I'll say, no, you have the major market manipulators as well. And I think that's turned out to be correct as well. So this ratio exists when basically synthetic, i.e. Bitcoin IOU claims exceed the real coins that are available for delivery. Excuse me. Let me grab some water. Got a little bit of hole in my water. I've got a hole in my bucket. All right. Okay. So when there is not enough Bitcoin available for delivery, you have to try and get that Bitcoin. And the only way to get that Bitcoin is when the price rockets up in order to try and persuade someone to sell that Bitcoin. And so with these different types of mechanism, you can do short-term price manipulation via leverage-driven. You try and get people into leverage. You try and get people into custody. And you try and get people to borrow against their Bitcoin. And you try and get them to buy a Bitcoin treasury company rather than Bitcoin itself. And you try and get them to use an ETF so that then the authorized participants, the APs, like Jane Street, are able to create those shares and try and settle underneath and do their operations in between. So this is the supply-demand mechanisms. And now there's nothing we could ever do about this. This was always going to happen. And no product is immune to this. This happened with gold, happened with silver, happened with equities. This has happened with, and now Bitcoin. And so the only way to outperform this is to be an investor rather than a trader, unless you're on the inside. I learned that lesson a long time ago. And this is the derivative complex and the phase that they built up to prior to 2022, and then Operation Choke Point 2.0, and then leading into the Trump administration. So this is bipartisan. This is the financial industrial complex that doesn't care who's in charge. I believe right now that there was a high SFR rate, and that's based upon settlement timing, crashes. You can have operations on the way up and operations on the way down. Now, we're not going to understand everything about the manipulation, but when Jane Street went into the spotlight this week, there was speculation around those different things, and we're gonna go through them. But preceding this, we had the silver operation, SLV, and we saw that Jane Street added, check this out, after that operation, an additional 20.67 million shares in SLV in Q4 2025, making them the largest holder of the iShares Silver Trust in the world. So we know that either they've got lots of contracts on the other side, or they're the largest holder. Now, who do they work for? Are they a front for another bank? You know, this plausible deniability exercise, you create a complex of hedge funds in order to perform these covert operations. I believe that the financial industrial complex has an operation to weaken the dollar and transition to a multipolar world. So silver has basically, long term accused by people in the silver community of, paper suppression. They believe that there has always been oppression in the price. This led to the rise of the dollar, and the dollar as the world reserve currency, because you have to pay a custody fee on these hard metals. Then silver became more industrial, used for AI, for solar panels, for military industrial complex machinery, for data centers, for all sorts of components. But it was derivatives dominated. The spot market was pretty small. Now, what happened with the silver operation is they created an environment where everyone wants their spot. China then said, we're going to regulate who actually gets to buy silver from China, which is the largest holder and the largest silver refiners. And there's always been long accusation that the synthetic supply of SLV has always exceeded the physical supply of silver available. And Jane Street was basically positioned in Q4 2025, whereby they could do a massive short squeeze if they wanted as a private company, which seems to have a certain level of protection, and without us being able to see the whole kimono. We could only see the regulated part, which is the ETF part, which lists Jane Street as the largest purchaser, but we can't see the derivatives part on the side. We know that right now, the demand for silver from industrial producers created a structural deficit. And around Christmas, leading up to the holiday periods, there was a bunch of AI videos and narratives in order to push out and explain to people this structural deficit. There was also claims and allegations that JP Morgan has been long-term short. That was from the financial crisis days when it acquired Bear Stearns, and there was that Lehman Brothers and Bear Stearns position as well. But also, this coincides with the narrative around artificial intelligence. So we had AI is going to take over the world. We had dollar weakening. We had tariffs. We had silver structural deficit. And we had, basically a financial industrial complex, technical industrial complex, military industrial complex, geopolitical aligned event for this operation, where maybe they tried to cover that short position and inflict it upon someone else so that there was a covert bailout happening. And what did we see? We've been covering this all along. So we had basically a ginormous short squeeze where we had unprecedented increases in the price of silver. We had the Federal Reserve shift from quantitative from quantitative tightening to quantitative easing, but they didn't call it quantitative easing because rather buying long-term government bonds, they were buying short-term bill treasuries, and so they don't call it quantitative easing. And that was to bail out the repo market, which is the market to overnight lending between banks. This was all happening during the short squeeze. I think there was 18 billion initially of covert QE. We had a regime change at the Federal Reserve by Trump pushing to get the rates down. And we don't know who was on the wrong side of the silver trade. We do know that maybe there was a covert bailout that we just don't know about yet. We only get to see these things after the fact once they're resolved. So now consider that Jane Street is the largest holder of IBIT. Could there be another operation to suppress the price, get into a structural short position, and then end up doing a similar operation? Well, maybe at some time. And maybe, just maybe, the financial industrial complex doesn't have enough Bitcoin. And so could they push out narratives that makes the everyday person an ETF provider want to sell? While the volume of institutional holdings goes up. Well, that's exactly what we have seen. And we saw maximum amount of FUD operations in order to do that. Was that organic? It was also connected to the release of the Jeffrey Epstein files. I've long believed that the financial industrial complex has been strategically leaking those and telling the DOJ what they can release based upon their longer term operations to move to multipolarity. But we do know that Jane Street is an authorized participant for IBIT, and it's got the same ETF structure as SLV, so the silver ETF as well. They have the same derivatives overlay on top of it. But, it's kind of a different scale of asset. Like silver's a lot smaller, easier to manipulate. And so is Bitcoin in terms of, remember, Bitcoin took over silver in terms of the spot market as a market cap. And they reversed that. So they were playing around with this Bitcoin silver ratio at the time as well. Now, what did we get this week? Why are we talking about this now? Well, the reason we got this week is because a lawsuit was dropped by Terra Luna, which could have been Do Kwon trying to cover his ass or the bankruptcy trying to recover some funds. But it was pushed as a lawsuit against Jane Street. And this was related to the previous $40 billion stablecoin crash. Now, for those that weren't around in 2021-22 when this happened, I was actually writing my third book, and I'm going to go through I asked artificial intelligence to create a video from reading my book, because I remember doing a lot of research on how this operation worked and how it happened. And so I asked artificial intelligence to create a whiteboard explainer video by reading the book that I haven't released yet, where I've been documenting the entire history of Bitcoin from my perception of being a shareholder in many, many different companies and kind of seeing a lot of this from the inside. So why did this operation suddenly come back into the spotlight? So I dusted off the old book, and I'm just going to make sure that everyone's up to date. And then we'll look at what the lawsuit said about Jane Street. We'll look at the Indian case, and then we'll look at the common accusations and find out what we can learn from this and then what you can do. So, Azad, if you could play the first AI video on Terra Luna.
Back in May of 2022, one of the biggest projects in all of crypto, a top 10 player, just vanished in the span of a single week. Today, we're going to break down one of the most catastrophic events in crypto history and figure out how a $60 billion project literally evaporated into thin air.
And to help us unpack this whole thing, we're turning to the work of Bitcoin OG, investor, and financial analyst Simon Dixon. Now, what's so incredible is that he was actually in the middle of writing his third book, A Complete History of Bitcoin, when this all went down. So he was documenting the collapse live, in real time, giving us this unbelievable analysis straight from a chapter he was writing as the disaster unfolded.
Just look at that number. $60 billion. That's how much value was just wiped off the map from the Terra Luna ecosystem. gone in just a handful of days. This was the event that kicked off a truly brutal and unforgiving crypto winter. Okay, so let's dive right in. To really wrap our heads around the Terra Luna collapse, we first need to understand the sheer scale of the damage. This wasn't just one project failing, it was an earthquake that shook the entire market to its core. And Simon Dixon's analysis really puts this into perspective. He calls the aftermath the crypto apocalypse. The Terra collapse was the catalyst that sent the entire crypto market cap plunging from a peak of $3 trillion to under $1 trillion. It vaporized $2 trillion in value. So the big question is how? How does a project that looked like a pillar of the industry, one that attracted huge institutional money, just crumble like that? Well, to get that, we've got to look under the hood at how this thing was actually built.
All right, so let's get into the mechanics of this thing. Terra's entire system was built on a seemingly brilliant, but as we all know now, incredibly fragile idea. A machine that was designed to create a stable currency, literally out of thin air. At the very heart of it was the stablecoin Terra USD, or UST. Now you need to understand, most stablecoins are backed by real assets, actual dollars or bonds sitting in a bank somewhere. But UST? Nope. It was backed by pure computer code and its relationship with another super volatile token, Luna. The whole system relied on this clever trick, this arbitrage loop. Check this out. The code always let you swap exactly $1 worth of Luna for one UST token, and vice versa. So, if UST's price ever crept up to, say, $1.01, traders could instantly burn $1 of Luna, mint a new UST, and sell it for a quick, risk-free penny. That selling pressure pushes the price right back down to $1. It's a pretty clever idea, right? It essentially turned traders into the system's own central bank, constantly keeping things in balance.
And this slide really gets to the heart of the risk, doesn't it? On one side, you've got stablecoins, backed by actual stuff you can audit. On the other side, you had UST, and it was backed entirely by faith. Faith in the algorithm and faith that this other crypto token, Luna, would always have value.
But here's the catch. For that whole balancing act to work, you need one critical thing. Tons and tons of people actually wanting to hold and use UST. So how do you manufacture that kind of demand out of nowhere? Well, that's where things get really, really unsustainable. This was the number. Just look at it. Almost 20%. This was the insane annual yield the Terra's lending platform, Anchor Protocol, was promising people, just for depositing their stable UST coins. Think about that. Your bank might give you what, a fraction of a percent? This was promising 20. It was almost unbelievable.
And this is the absolute key. And Simon Dixon's analysis just nailed this. That incredible yield wasn't real. It wasn't being earned from any legitimate financial activity. It was a marketing gimmick paid for directly out of the project's war chest, subsidized by venture capital money. It was designed to create a massive wave of FOMO, pulling in billions from everyone, all chasing this impossible return. It was a ticking time bomb, plain and simple.
And this is where a quote from Simon Dixon just hits the nail on the head. If something can be successfully attacked in the market, it will eventually be attacked. Basically, if your system has a weak spot, someone, somewhere, is going to find it and exploit it. And Terra's massive, artificial incentive structure, it was like painting a giant bullseye on its own back.
And in May 2022, that bullseye got hit. The attack came. And what happened next was a full-blown, system-wide bank run. A $60 billion death spiral that played out in just a few agonizing days. It all kicked off on May 7th. All of a sudden, a massive $2 billion of UST gets pulled from that high-yield protocol, and it's just dumped onto the open market. The system simply couldn't handle a shock that big. The peg, that sacred one-to-one link to the dollar, it broke. And that's when the real panic started. So as everyone is rushing for the exits, desperately trying to sell their UST, the algorithm does the only thing it's programmed to do. It starts printing Luna. And I don't mean a little. I mean trillions upon trillions of new Luna tokens trying to soak up all that UST. It was hyperinflation on a scale we've rarely seen, and it completely, utterly annihilated the value of Luna, from over $100 to basically worthless.
But here's the thing. This wasn't just about Terra. Its collapse was like pulling the first Jenga block from the bottom of the tower. It sent this shockwave of failure and insolvency ripping through the entire crypto industry, and it exposed some really, really deep systemic problems.
You see all these huge names in the industry, hedge funds like Three Arrows Capital, lenders like Celsius and Voyager. They were all massively exposed. They had huge bets on Terra's ecosystem, often with borrowed money. When Terra went down, it started a chain reaction that pulled them all down with it.
And the very next big domino to fall was the huge crypto hedge fund Three Arrows Capital, better known as 3AC. They had a ton of money in Luna, and when it went to zero, poof, it just blew a gigantic hole in their balance sheet, triggering their own collapse.
And that's the chain reaction right there. Step 1, Terra implodes. Step 2, 3AC, one of its biggest backers, goes bust and defaults on all the money it had borrowed. And so step 3, the companies that loaned them that money, like Voyager and Celsius, they're suddenly insolvent too. They slam the gates shut, freezing withdrawals for millions of regular people. It was an absolute credit crisis.
So when you look back at this whole mess, this story that Simon Dixon documented as it happened, it leaves us with this really big, uncomfortable question. When a system is built on these kinds of artificial incentives, with just a handful of people really pulling the strings, can you even call it decentralized? Or is something like a death spiral not just a risk, but basically inevitable?
Okay, so that was a little summary of my work at the time. Obviously, there was a lot more detail to that. Now, I remember because I was there as one of the 7th largest creditor in the Celsius bankruptcy, as one of the shareholders and somebody that was testing borrowing against my Bitcoin, which is why I don't do it anymore, taught me a good lesson. Fortunately, it was a tiny percentage of the Bitcoin that I was willing to speculate around. I remember that this didn't take down Celsius, even though that's been framed, because Celsius, and we covered this last week, was one of the institutions that I said the co-founder got Israeli protection. And there were lots of Mossad-style connections. I'm not saying they were directly Mossad, but it was definitely evidence that it was used as an op. If you didn't watch my interview with an ex-IDF Israeli that left Israel, make sure you watch the interview. We went deep into this and the level of protection that they received. But Celsius was actually one of the insiders that pulled their money out. There were 3 insiders that pulled their money out. One of them was Celsius, one of them was Jane Street, and the other was Transform Labs, the Silicon Valley funded company that was subsidizing a lot of the yield and on the wrong side of the pump and dump scheme. Who was meant to go down? Well, Three Arrows Capital went down. They were on the wrong side of the trade. And so did FTX Alameda. Now, does that mean that FTX Alameda wasn't in the inner circle? Well, we know that FTX had many of the same circles as Jane Street. So maybe the operation was FTX was meant to go down. Alameda was meant to go down. Celsius pulled out some of the money, so had insider information, but it was other recklessness, fraud, and theft that took down the Celsius side, mainly around the manipulation of the Cell token, in the case of FTX, the FTT token, and in the case of Terra Luna, the shitcoin around that as well. So people talk about the 40 million stablecoin, but there was also, 40 billion stablecoin. There was also 20 billion in the shitcoin that backed it up that we talked about in the AI overview. So Luna was essentially a major catalyst for the crash of 2022, but was it the only player? Well, no, there was the precursor to Bitcoin ETFs, which was GBTC, headed by Barry Silbert. And Barry Silbert was also engaged in lots of incredibly fraudulent activity. There was lots of fraud, Celsius and FTX, Alameda. So it was a chain reaction, but it wasn't the whole story because GBTC was the position that also wiped out a bunch of money for both BlockFi, for Three Arrows Capital, the hedge fund, and also FTX. Now, if you remember, right after this, Sam Bankman-Fried was painting himself as the hero that was going to buy up all the companies and bail out all the companies. It turned out the reason is because he'd lost $8 billion and was also engaging in all sorts of fraud. He came up on a space. I asked him a bunch of questions. Those questions were actually used as evidence in the court case on that X space as well. But if you look at the chain of events, May the 7th, 2022, the Terra basically ignition event occurred. And if you look at the law case, they said that there were insider trading and insider knowledge prior to that. And so what actually happened, excuse me. So we know prior to the collapse that Transform Labs withdrew 150 million UST. And that was from, the Curve protocol that was responsible for propping up a bit of the algorithm. We also know that prior to that, they changed their business model and backed a bunch of this algorithmic stablecoin with Bitcoin. And so that led to a bunch of the buying volume leading up in the bull market. Now, when they needed to liquidate, they also had to liquidate a bunch of the Bitcoin, and that led to the crash of Bitcoin, the leverage, the hedge funds, and then we had the cascading liquidation cycle, the same exact setup that they set up today with all of the Wall Street institutions as well. So within 10 minutes, according to the lawsuit, a wallet that was allegedly in the federal lawsuit that we can look up on the blockchain that received about millions of dollars was linked to Jane Street, and that wallet withdrew about $85 million. So the allegation is that both Transform Labs and Jane Street, and I remember the other one was Celsius as well, but that wasn't covered in the lawsuit because they settled in the bankruptcy. So $235 million of liquidity was removed before public disclosure, plus the Celsius stuff as well that wasn't put in that. That created the UST DPEG. That created a liquidation cycle. That led to the Luna collapse, and that led to $40 billion wiped out over that period as well. And following Tether, we had the bankruptcy of the hedge fund, Three Arrows Capital, which is still in a bankruptcy and settling. We had the Chapter 11 for both Voyager and Celsius. And then later we had the FTX collapse, which was around Binance exposing its position with the FTT token around November 2022. Prior to that, Sam Bankman-Fried was trying to buy out all the crypto companies and try and maintain their reputation and roll over the Ponzi. This led to the crypto winter, and that led to Operation Choke Point 2.0, where a bunch of the crypto-friendly banks were wiped out. And we know that was an operation at the Federal Reserve level, at the ETF level, at the financial industrial complex level. Then we had the bank takeover of all the different Bitcoin derivatives complex being built, and the Bitcoin financial industrial complex and all these different tools being handed over to traditional Wall Street players. We then had the move over to the Trump administration, the ETF launch, BlackRock saying that he's now telling everyone about Bitcoin, the handover to institutional accumulation, the rise of Bitcoin treasury companies, and Jane Street was the authorized participant, of course, for that. Now, the lawsuit allegations are basically coming from a former Transform Labs intern that worked. Basically, his name was Bryce Pratt, and he later joined Jane Street after working for Transform Labs. So we had an intern at Transform Labs that then went over to Jane Street. And the allegation is that there was a private chat group that was allegedly set up that was sharing insider liquidity information. Now, who was in that group? We'll find out. But trades that were essentially, they were basically in the lawsuit that was talking about being impossible without inside information was the language that they used. And Jane Street basically denies the allegations and says that it's absolute just baseless accusations and blame shifting. But the court proceedings are going to be going on. And so we will watch with interest, and we're going to get some transparency. Now, remember what happened with the FTX bankruptcy. They revealed everything. They took out FTX, but they left all the political campaign financing and all of the corruption around the board, the family of SBF, and the Sullivan and Cromwell became the lawyers as well. And so Sullivan and Cromwell are the same lawyers that work with intelligence operations in the formation of the CIA and many of the different Mossad operations and MI6 operations as well. And so you notice this law firm turning up. You also notice that SBF was connected and his family seemed to get away with it. You also notice that SBF and his family are tweeting right now to try and get a Trump pardon as well. But anyway, what were the accusations? The accusations is that they had the ability through their liquidity to move the spot price of Bitcoin and the tokens, and then they could harvest these derivatives. They could create a collapse that would escalate those cascading liquidations. And Jane Street, interestingly, was connected. All of the people that worked for, or some of the people that worked for FTX, which was the exchange, and Alameda, which was the hedge fund, they had a background of working and came from Jane Street. That's where they were groomed, allegedly, as well. So Sam Bankman-Fried, who worked for Jane Street before he worked for creating Alameda, the hedge fund. So it started as a hedge fund and then later invested in FTX, the exchange. And FTX, the exchange, allowed Alameda Research to pull out unlimited liquidity in order to make these bets. And on the board was Sullivan Cromwell, who is a law firm, as I said, that was connected to CIA, Deep State, and various other things as well. Now, what about who was in the SEC at the time of SBF? If you remember, SBF was writing the regulations prior to Clarity Act and Genius Act that we're having right now. His firm, FTX, was sponsoring the regulations. He was also the only one that was able to get a meeting with the SEC at the time. Who was chair of the SEC? Chair of the SEC was Gary Gensler. Gary Gensler, who was allegedly contacted by email in the Epstein files and tried to get connections with Gary Gensler. Gary Gensler worked at MIT. MIT was doing the central bank digital currency was Sam Bankman-Fried. And Alameda operated with a very, very sophisticated derivative strategy that turned out to be a complete fraud when the derivative complex was being built. And for some reason in 2017, Sam Bankman-Fried came from nowhere and was held as the boy. You know, the media had a massive, massive boost in terms of his reputation. So he was groomed from Jane Street and propelled into superstardom. And those that came into Bitcoin later were all like, I thought he'd been there. He was an OG that had been there all along. Now, he was manufactured. And he shared quantitative trading networks. And apparently these existed across these different firms. So when FTX goes bankrupt and $8 billion was the allegation of the whole, we had an interesting timeline. In 2021, FTX buys an 8% share in which company? Anthropic. Anthropic, the one that we're being told is doing all the disruption in AI right now. Now, somehow, SBF, via his networks and the part of the case that was dismissed, where he would hired fixers like Jeffrey Epstein in order to broker being able to purchase a position in Anthropic. And that was for about $500 million. In 2022, when FTX collapsed, it was one of the disclosures that there was a large position in Anthropic. And now SBF is using that because the value of those shares went up to say that there was no fraud and no hole. No, the reason that there was, you got bailed out is because you used the bankruptcy process and sold all the Bitcoin and locked in a Bitcoin claim at $15,000 after the price of Bitcoin was sold. And who ended up with some of those Anthropic shares from the bankruptcy, or they were sold to? You guessed it. Jane Street ended up with shares at approximately an $18 billion valuation in the most important and successful company in AI alongside the various others. So Jane Street reportedly buys a $100 million Anthropic share connected to this position. So there is no proven corruption, but we can connect a bunch of dots. We also know that the investigation into it was thrown out in the bankruptcy case, and they just put SBF into prison and said, right, that's enough. We don't need to, that's a big enough prison sentence. We don't need to look into anything else. But we do know that they basically shared personnel, pipelines, positioning into both the collapses. And we know that they were connected throughout these cycles, and there were these different types of groups. And so in January 2024, we had the creation of the spot Bitcoin ETF, which was approved by the SEC. So Larry Fink is able to get a spot Bitcoin ETF approved. The crash was created by GBTC, which was the Global Bitcoin Trust, which was Barry Silbert, who settled, didn't go into prison, and suddenly got away with everything. But SBF was taken down for the fraud that he committed. And now we get this Operation Choke Point 2.0. So the BlackRock IBIT basically approved an authorized participant. And who were those authorized participants? The main one was Jane Street. And we had other types of ones that we should look into. Virtual Americas. Virtual Americas, JP Morgan Securities, and then Marex as well as the other one. Now we move to September 2025. The SEC approves. What did they approve? What was the first thing they approved under the Trump administration? We have the SEC approving in-kind create basically ability for authorized participants to have Bitcoin settlement from a Bitcoin ETF just for authorized participants, not for everybody else. So you could buy a Bitcoin ETF and you could exchange the Bitcoin ETF for Bitcoin only if you were an authorized participant. And so that was approved in September 2025. So now APs can take the Bitcoin ETF and they can exchange it for Bitcoin directly. And there is a time lag that should be investigated as this proceeds between issuing the shares and settling as well. And that may be, I don't know what that extended settlement time frame may be, but this is the lack of transparency. Now, what happens if you're an authorized participant? You're not subjected to the same level of transparency. Why are they not subjected to the same level of transparency? Well, they say market manipulation. So they have a black box and a weakness within this. So major trading firms are now basically embedded directly into Bitcoin's liquidity pipelines. And so in late 2024 and early 2026, basically, the allegation was from the Bitcoin community that there is something called a 10 a.m. A 10 a.m. was one of the allegations. And what this was, that basically a pattern that people started to post about on X, that at 10 a.m., there would be, beginning from November 2024, and this was accelerating throughout 2025, was the allegation that approximately 10 a.m. ET, which is the US equity open time, when the ETFs would open, that there would always be a 2 to 3% sharp Bitcoin dump. And this went viral across Twitter. So everyone was reposting the same thing, saying that there's a 10 a.m. Dump, and everyone was saying that was Jane Street. The reason they were saying that was Jane Street is it matches other patterns in the Indian case where we got transparency as well. And so what the allegations were is that 100 million to 200 million long derivative liquidations would suddenly occur around that time. And then it would recover later in the session after that sudden pulling of all the long liquidations. And they would pick out different dates that went viral across Twitter. One was December the 1st, 2025, where this happened. The other was December the 5th, 2025. Then it happened again on December the 8th, 2025. Then it happened again on December the 10th, 2025. Then December the 12th, 2025. Then December the 15th, 2025, all leading up to the silver SLV short squeeze as well. And this continued across January and February 2026. Now, the allegation is that, for example, there was, when Bitcoin was priced at about $89,700, it would suddenly, in this liquidation cycle, when the US market opens, it would crash down to 87,700 within minutes, basically, as soon as the market would open. Now, that would be 171 million in long liquidations were wiped out during that time. And they came up with a nickname for this, and people started posting it. And they said that it was the 10 a.m. slam. And so when basically Transform lawsuit dropped this week, the headlines hit that the 10 a.m. slam and the dumps, they suddenly stopped happening. So I wanted to look at that this week and say, is that actually true? Because it went viral across Twitter. And so the allegation was that the manipulation has now stopped. The 10 a.m. slam no longer happens because the lawsuit came out and therefore they stopped doing it. There was another allegation, and I reposted this and corrected it later, that Jane Street deleted all of their tweets. Now, anyone that's a lawyer would say, don't delete all of your tweets. That's a type of behavior that is very problematic. It didn't actually happen, even though it went viral across Twitter. They never tweeted. I can't prove that, but that's what, from my research, looks like, because I wasn't looking at Jane Street prior to that. But I'm sure evidence will be presented. So I don't think they deleted their tweets. But there was a pause in the 10 a.m. slam this week. And so I was leading up to this looking at the actual data. And so basically, if you look at the BTC price action in February 2026, because no one actually looks at this, you can see that on February the 24th, the 10 a.m. pump led to it being up 2%. So people were like, okay, the slam is over. What happened the next day? February the 25th, the 10 a.m. pump was up 1.5%. Then on the 26th, the 10 a.m. slam was flat. So we didn't have the dump. February 27th, the 10 a.m. was down 0.8%. And so we had a Bitcoin rally, but, you know, I guess you could say that it wasn't consistent. So it's not happening right now. But the allegations were that the shorts are liquidated. And so we can't really pull any data to find out whether this was actual proof. Because if you look at the... Okay, I'm going to carry on. So we'll fix this one in the edit. But having looked at the data, so we were talking about the 10 a.m. dump. Across the data that I looked at, I just pulled out what was happening at 10 a.m. The 10 a.m. dump, it was rare that it would actually happen. So either it was coordinated dates, but it wasn't consistent. It didn't happen every single day. Now, the 10 a.m. pump was quite common. So we would get a pump around about 10 a.m. and then we would have days where there was the 10 a.m. dump. But the most common was that nothing would happen. And so draw with that what you want. Either they're doing it on selected days, but I think there's no consistent action. And so you'd have to actually really attribute to, I think you can only say that it's random movement. And that's what we concluded from there. Now, the next allegation is the 10 a.m. dump was at Jane Street. Well, I don't think there's anything we can prove at the moment. But if this actually goes to court, then maybe there could be data requests that prove that, unless it's a protected class. So what was the next allegation? The next allegation was that the massive liquidations that kicked off the bear market from $125,000 to where we are today, that really kicked off when there was ginormous cascading liquidations on October the 10th, 2025. That was an infamous day. It was actually, in the entire history of derivatives existing in Bitcoin, we had $19 billion of liquidations in a very, very quick period of time. And so the $19 billion was effectively across the entire crypto market. So this wasn't just unique to Bitcoin. This was at exchanges that made multiple markets, but $5 billion of it could be attributed to Bitcoin. And so if it's Jane Street and it's using, its authorized participant, then there's only $5 billion of liquidation. Now that's serious as well. That happened on the 10th of October. But it did really kick off the reversal in the price and the bear market. Altcoins were completely wrecked after this. Good riddance, 20 to 70%. Sorry if you own some. If you are a long-term listener of Simon Dixon Hard Talk, you don't mess around with gambling. But the allegation was that you saw there was a massive hit on the spot markets of Bitcoin. Then you had a massive drop in the index during that day. That obviously triggered perpetual futures liquidations, margin calls, and those that, then that creates a cascade if there are margin calls, which creates the forced selling, and that accelerates the forced selling. And then you have to cover some of your shorts afterwards if you were profiting from it. And then there would have been low margin calls. That all happened to a very high degree in a very large wick on October the 10th. Spot liquidity on that day was 1/15th of the price liquidity, the perpetual futures liquidity. So the vast majority of the market was paper Bitcoin through derivatives contracts and perpetual futures. And there was a need for spot Bitcoin, and somebody was on the right side of those trades. This was the derivative architecture that really allowed this ignition and cascading liquidation to happen. If you control those types of markets and you use a covert operation like we saw with Terra Luna, then what is it that actually ignited this? Well, there was a public rift between Binance and OKX. Binance is an exchange that is global in nature, but regulated within UAE, has a background in multiple jurisdictions, a Cayman Island structure, various other things. So relative to the US, offshore. OKX, which originally was a Chinese exchange, relocated to Hong Kong. They said that they got rugged by Binance. And this was regards to a stable coin that blew up. I didn't know anything about this stable coin because there's a lot in the market, but it was called USDE. So OKX was blaming Binance for the wick, and that wick was created by the perpetual markets that were the vast majority of the trading volume. After that, we saw several months later, recently, that there were allegations in the South Korean exchange Bithumb that there isn't enough Bitcoin to meet their Bitcoin paper obligations. And so we're seeing the same operations time and time again, but we don't have that transparency. We also know that CZ, who handed over his compliance in Binance to the US government, and when Israel wanted to seize Palestinian accounts, they complied with that. And CZ suddenly gets a pardon and only 4 months in prison. We know that there was a pardon operation, and we also know that there were deals done between World Liberty Financial, where their stablecoin was allegedly attacked, and we know the Trump administration did a partnership with Asher Ganut of what was the name of the mining company? They were involved in the Celsius bankruptcy. Hut 8. They did a partnership with the sons of Donald Trump and, Eric Trump and Donald Trump Jr. And their Bitcoin mining operation got a huge hit as well. And so we're seeing all of this coordinated action as well. Is that a financial industrial complex operation to keep the Trump administration on track? We also know that there was a $2 billion investment facilitated through World Liberty Financial's stablecoin into an investment in Binance, and Binance owns 87% of the stablecoin that the Trump family launched through World Liberty Financial, connected to the largest investor, Steve Witkoff, who is the envoy for the Middle East negotiating these border peace operations, as well as Trump's son, Jared Kushner, being the one that is facilitating investment via the border peace that we covered last week as well. I don't want to go through that again. So we're seeing that there are potential FICK operations through these corrupt blackmail operations, and the allegation is that this was done via Jane Street. We don't have any evidence that this was done via Jane Street yet. What do we know, though? We do know that similar operations happen through the transparency we have in the Indian case. So people were putting the two together. Jason Belcher said the, similar operation potentially. We can't say it yet, but there is a pattern that we are starting to notice here. So in July 2025, we know that the SEBI, which is the enforcement division within India, and we know there were similar operations within South Korea and China. So we know India, South Korea, and China are looking for transparency around Jane Street's market manipulation. We also know that Scott Bessent engages in currency warfare through his admissions. Where is this being done? Is this a protected class financial industrial complex? And is Jane Street a key node in the proof of weapons network? And is it above the law? We don't know. But it seems to be protected in the US. And we will see whether it is protected in the US, just like factions of FTX, just like factions of Binance. So the SEBI, India's investigation, we have a 105-page enforcement order that was against Jane Street's different types of entities. It was in relation to a stock where there was a morning pump in a stock called Bank Nifty. And there was derivative positions where they had 7.3x larger derivative exposure than the spot underlying stock. And there was an afternoon reversal, which was pattern around that. And it led to $580 million of gains for Jane Street, which has now been frozen in escrow. And the regulator's language around these financial weapons of mass destruction was, quote, deliberately devised device. It was a deliberately devised device to manipulate settlement prices. Settlement prices. So could this be the ETF play around settlement? We shall see. But essentially, you move the spot markets, you harvest the derivative complex, you reverse the positions after gaining longer short exposure and various other things. You repeat the pattern again and again and again. And we basically, through the India case, have a documented precedent linking Jane Street to these types of market derivative operations. So the answer is, where are we now? And then we're going to answer the question of what you can do, and then we're going to go into the interview segment in part 2. I told you this is going to be comprehensive for those geeks that like to go into the detail and get things right. And then we'll obviously create the AI videos for those that want to get the quick TLDR and whiteboard videos as well. What have we had since then? So we have had the construct of what I've always been warning people about: Bitcoin treasury companies, which is where you take OG Bitcoiners or people that have reputations and brands, and you wrap them in a financial weapon of mass destruction so that they become part of the derivative complex. The first one I warned everyone about was strategy MSTR via Michael Saylor. Basically, we now have massive unsecured convertible debt issued against an equity position, so bondholders subordinate to equity or above the equity holders. We have heavy dilutive mechanisms for issuing more equity in order to buy more Bitcoin. We have a complex arbitrage process, and it is all dependent upon the financial industrial complex capital markets providing the liquidity so that MicroStrategy can buy more Bitcoin, and that creates an upward pressure on the price by taking Bitcoin out of the market. So that's manipulation that you can have on the way up effectively. And none of this would be considered illegal, but it is a financial weapon of mass destruction for the financial industrial complex. This subordinates Michael Saylor to the financial industrial complex, debt capital markets, equity capital markets, and it pulls Bitcoin out of the market. It removes Bitcoin from the float, but is all done via FICK underwriting. Is one of those players Jane Street? We should look deeply into that as well. It creates the ability to have unwind pressure whenever you need it. It doesn't mean you create an environment where strategy goes into chapter 11. You can get rid of the asset if you want. But there was that whole thing of inclusion in the S&P 500, not inclusion. And there were the different types of operations that we've seen. So I think MicroStrategy is a beautiful product for the financial industrial complex to engage in subordination and market manipulation. And we have seen ever more products that rely upon these synthetic derivatives, trading off volatility, and these types of operations that is driving a dividend in some of these products. It's a black box at this stage. Yes, you get public company disclosure, but you don't know how yield is being generated for these dividends, which relies upon, and this is the most speculated upon product in the derivative complex in the S&P. We also know that there was the creation of a new vehicle, 21 Capital. Jack Mallers had a reputation in the Bitcoin space. Was his family connected to commodities traders, structured via Cantor Fitzgerald. This is when I started warning about it, saying, Jack, do you know what you're getting into bed with? The liquidity is coming via investments from Tether, also Bank of Japan, SoftBank connections as well. And my bet is a potential roll-up strategy to acquire Strike, which is an app that allows you to acquire Bitcoin and borrow against your Bitcoin. It started to launch Bitcoin-backed loans. There were lots of margin calls as the price crashed around, this 10-10 operations. And so you can roll in Bitcoin-backed loans into another vehicle. This is another tool for the financial industrial complex when they need to push price manipulation in order to trigger margin calls, force liquidations, and then you can have this reflective unwind pressure on the downturn whenever it's needed. The third different vehicle that they've created, we saw Nakamoto, Naka. And so basically it launched in May 2025. There was a stock market pump. I was warning everyone not to be involved in this. The price went from $2, which was a premium to the net asset value, the Bitcoin in there. And it went up to about $30+. Pipe investors were basically at $1.12. $1.12. So launched at the $2-3, had that massive pump. You may have got a massive amount of selling there, dumping onto retail. We don't know. That was a market trade. But we got the dumping on there. And within 9 months, the price of Nakamoto has crashed 99% to approximately 29 cents. Now, I haven't looked at the price. There was several announcements that were built into. It was David Bailey, that runs this, David Bailey came out and made some explanations this week after an article was published by Justin Belcher around what he thought was happening with Nakamoto. Now, there was in December, because the price goes below $1, you effectively become a penny stock, and you get Nasdaq delisting notices, and then you end up on the pink sheets and other markets. That was around December the 10th, 2025, that this happened. So what else do we know in order to try and protect the company? Well, $97 million of quarterly losses were published. It's behind on its latest publishing, saying that complexity of auditing operations, complexity of operations, because you can only publish things that will later be audited. We know that there was a debt spiral that included the following. Bitcoin was sold. So there was $290 million of convertible notes that were issued, $203 million of term loans, and $206 million USDT Tether bridge that was issued, and a $210 million Kraken loan based upon a collateral of 150% Bitcoin collateral. If you were involved in Celsius, you know that Tether issued a loan based upon client Bitcoin, and then they rug pulled that when the price crashed after Terra Luna, and there was a settlement in the Chapter 11 case that led to a recent distribution. So you have the same construct that's being built within Nakamoto. And so Naka then announces, and I got this bit wrong. I thought this was new news, so I said something on X. It turns out that it was in the original slide deck. So investors that actually read the prospectus would have known that this was going to happen. So the price is crashed, is laden up with debt. And so basically Nakamoto now work for the financial industrial complex. And so what does it acquire? It acquires Bitcoin Magazine, a news outlet for pushing out Bitcoin news. Now, it also acquires the company that's doing Bitcoin conferences. I was invited to Bitcoin Mena in December. Maybe I'll publish the recording, I don't think, where I was talking about how you can achieve peace in the Middle East through Bitcoin strategic reserves and talking about the importance of self-custody. I'm sure it may not be invited to those again, but we've now got Bitcoin conferences where everyone was talking about Bitcoin treasury companies, stable coins, Bitcoin strategic reserves, centralizing forces. There was also a hedge fund called UTXO Management that David Bailey and his team were running. So now, through this pump and dump cycle, laden up with debt, subordinate to the financial industrial complex, Bitcoin was sold. You have a tool for price suppression. And now the media conferences, media plus the conferencing outlet, and hedge funds are all tied into this Bitcoin treasury company wrapper. Then we also get, this could be a narrative layer. This is how the financial industrial complex uses short-term manipulation to corner markets and try and build the tools to fool you out of your Bitcoin, because what they really want is your Bitcoin held with them rather than your Bitcoin in self-custody, which is what I've been constantly warning about. And I told you the same thing that happened with Celsius and various other things will happen at the hedge fund level. Now we're starting to see it. And so we've got that market structure. What else happened? Adam Back went on news this week, and he's now pushing his Bitcoin treasury company. Adam Back, yes, the same Adam Back that created Blockstream. I covered this in Epstein files, what files were there. You can go to my blog and look at that. Andy Back went to visited Epstein Island. A vehicle was used to fund Blockstream, a company headed up by Adam Back. There was confirmation that he went to the island in the emails. That was the allegations. And we've had no talk about it since. But who was meant to be a cypherpunk previously suddenly is like the biggest shield for Bitcoin treasury companies, stable coins, and his new company, BSTR. What is BSTR? Well, BSTR will be launching allegedly around about April. It's launching via a SPAC, which is where you take a public company and put your assets into it. I'm guessing maybe Blockstream will be rolled up into that. And who was the investment bank and the broker? Of course, it was Cantor Equity Partners, headed by Brendan Lutnick, who's the son of Howard Lutnick. Howard Lutnick, who lied about his connection to Jeffrey Epstein, and is the holder of the treasuries for the stablecoin Tether, and was a neighbor of Jeffrey Epstein and managed to buy his house for like $10, according to the court documents and various other things. And now photos have come out with Howard Lutnick on the island, and he should be subpoenaed to answer questions for his connections to Jeffrey Epstein. And so now you have embedded potentially the Blockstream structure into a Bitcoin treasury company. Silicon Valley exits. Jeffrey Epstein allegedly was involved in a divestment operation. We don't know. That's what Adam Back said on X. And now potentially you've got a roll-up mechanism into this Bitcoin treasury company, which is why these Bitcoin treasury companies exist. And it's why I've been talking about, where I talked about, if you go to my episode on hijacking Bitcoin, that we should beware any developers that are inputting on the latest code debates. We should be worried about whether these are infiltration operations as well. Not saying they are, I'm just saying these are the things we should consider. So this may be a developer infiltration operation. So this is how you go from cypherpunk to stablecoin operation to Bitcoin strategic reserve to Wall Street shill. And these are the types of infiltration operations I've been warning about all along. So this is a structural pattern that we are starting to notice across the asset. This happened to gold. This happened to silver. This happened to oil. This happens to equities. And now it's happened to Bitcoin. What is the pattern? The pattern is that you financialize the assets through Wall Street wrappers that encourage you to not own it in self-custody, but to own it in custody. Then you layer different types of derivative products on top. Then you expand synthetic supply by creating paper Bitcoin over Bitcoin. Then you try and control the liquidity windows as much as possible. Then you harvest the volatility through this preferential regulatory arbitrage that doesn't require the disclosure. And then you benefit from the long position on the unwind, and you benefit from the short position during the harvesting. This is Jane Street's game. Jane Street is the largest holder of SLV, Bitcoin ETF, and is the largest holder of IBIT. But we don't have the transparency on the derivative liabilities and the derivative complex due to its private nature and its construct with off-balance sheet companies, as we saw in the Indian disclosure as well. So it is one of the most profitable trading firms globally in the world. It is an authorized participant inside the ETF plumbing, and this is the same structure that exists with a different asset. So can we categorically prove that the price increase and the price suppression is responsible due to Jane Street? What I know is that you can only do that on the short term, and they have built the construct to manipulate the short-term price. Long term, if you hold Bitcoin in self-custody, they have to cover those trades, and we don't know the full extent of all the allegations of whether it can actually be true. And it seems that it might get a level of US protection, which implies to me that is a strategic counterparty, and it's a member of the financial industrial complex. And let's see, we got the disclosures outside the US. Let's see if we get the disclosures in the US. Remember, I've always said that Bitcoin is not under attack by this at the protocol level. It is basically why? Because the way that Bitcoin was set up is you have nodes that set the rules. You have miners that secure the network. You have developers that propose the changes. And so when miners are including the new blocks into the blockchain and developers propose something that they want to change, it's the nodes that enforce the rules. And that's exactly what we're going through right now. And the only people that get a say, that protect the network, are the people that own Bitcoin in self-custody and run nodes. There are 25,000 nodes all around the world, and the mining is a decentralized network. And so please listen if you're going to be involved in this, and it's a very important sovereign protection layer. Listen to my previous episode. I did one last week where I go through the different types of, I went through the whole Celsius thing, various other things. The one before that, the week before that, was whether Bitcoin is hijacking because we're in the FUD cycle. That cycle to make you sell your Bitcoin was brutal, and I've seen nothing that changes the structural element of Bitcoin that implies the entire ecosystem is hijacked. In fact, it demonstrates that Bitcoin is working. So watch the Hijacking Bitcoin episode if you haven't done that. Go to my blog, simondixon.com, and you can see these different episodes. Also, watch my CIA episode. Was Bitcoin created by a CIA? Who is Satoshi Nakamoto? And you can see that these misinformation is used in order to scare you into selling your Bitcoin, because Bitcoin is always under pressure. And now they moved, which I warned you against through the Wall Street mechanism, is to apply the pressure at the leverage layer to get you to sell your Bitcoin. So what is the solution? We can't beat the financial industrial complex because they have the whole socialize the losses, privatize the gains, change it from QT to QE. We've unearthed the different layers. So what is the solution for us? Well, the solution for you is not to believe that this isn't something you should be involved in and you don't get to boycott like I've always been talking about. You boycott by doing a structural withdrawal over time. This is why we self-custody Bitcoin, and I've always talked about that. This is why we run nodes if you want to protect the network and engage in the debates of enforcing the rules so that they never change. And that is even because of the block size war that we made it trivial and inexpensive for people to run nodes. That was the whole essence of the debate. This is why I've always said, don't borrow against your Bitcoin unless you're doing it in a very risk managed way. If you have to, I understand reality kicks in. This is not perfection. This is about being better, but never put yourself in a position where you lose all your Bitcoin by borrowing against it and then leveraging up and buying more Bitcoin. And now you're a collateralized debt obligation subjected to the whims of price movement. This is why I say don't trade, avoid leverage. You don't get yourself in a position where you can be subjected to the short-term price manipulation. This is why I say avoid derivatives. Just boycott them altogether. This is why I say don't use wrap Bitcoin in another layer through a DeFi contract in a network that's controlled by Silicon Valley through pre-mined shitcoins that pretend that they're decentralized, just like Terra Luna did. This is why I don't ask people to guess where the top is, where the bottom is, because you're not in the inside like I was when I was a market maker. This is why I say accumulate regardless of price by owning more Bitcoin this month than the previous month. And this is why I personally refuse, and I recommend people to personally refuse, systemic float of Bitcoin financial weapons and mass destruction. This is why I say don't trade, because you have to leave it in the exchange. This is why I say don't shitcoin, because you're taking an insecure proof of work network or exchanging it for proof of stake, where the ETF provider can govern the network by actually owning the coin, and the Silicon Valley pre-mined operations. They are all connected to the financial industrial complex, and they control the paper instruments, which means they control the short-term price, which means that they control it. And there ain't nothing you can do about it unless you're going to be on the inside and grow bigger as well. So don't try and out-trade them. That's the message. You want to out-invest them. And out-investing means it's the great equalizer because you don't care about price. You have a long-term strategy. For the next decade, you know what the game is, the macro game, the geopolitical game. And your position is to do what everybody can do. And that is, be the spot liquidity that they eventually will need and they'll try and get from you. And you'll put your finger up and say, how much are you willing to pay? Because that's what happened with silver. That's what's happening with gold. And that's what will likely happen with Bitcoin as well. So Jane Street cannot print Bitcoin. They can only print derivatives and synthetic versions of Bitcoin. When enough Bitcoin exits and when enough Bitcoin is custodial, as the majority is today, then just exit the derivative plumbing and they'll want your Bitcoin from you. And when they need it at a rush, it will be at a higher price because the synthetic float ratio collapses when people realize they need self-custody. And that is the idea behind Bitcoin. And that is why they try to hijack it. And the structure of it is why it's resilient and there's nothing else like it as well. So when you need Bitcoin in self-custody, paper falls and the real price emerges because you need to settle these on the other side. And I personally, as I've said in the geopolitical section and the macro section, I believe that they want to use this as a negotiation, as a tool when they transition to a multipolar world. So that's everything I've got for you on part one. And I hope you agree that I go into the detail. We don't want to engage in shallow conversations. We don't want to engage in propaganda. I have no interest in hiding the truth, making things sound better or worse than they are. I only care about accuracy so you can make the right decisions in a time and an environment where everybody's lying to you. So in part two, now that we've got through the technical issues, I want you to understand. And so I did an interview with an early developer in Bitcoin called Amir Taki. If you're a long-term listener, you'll know that I said that Amir Taki was targeted by Jeffrey Epstein and he took some funding into his company, which I got wrong. I corrected that on the record and I wanted to invite Amir Taki to share his version of events. I'm not endorsing Amir Taki. And I was invited by Suleiman Ahmed, who was grilling him and asking some hard questions. And we wanted to do this for a reason. And I'm going to be playing this for you for a reason, because I was asked to co-host so that I could ask the difficult question. And Amir Taki agreed to do that because he wanted to share his story. And I corrected the mistakes that I made in my last interview. And I wanted to do that publicly, to be fair as well. And I basically asked him about his experience being contacted by Jeffrey Epstein. And he revealed things that no one knows in terms of who he thinks went to the island. I can't endorse it. I can't verify it. All we did is gave him a platform to say it. And then we asked the question. We also grilled him on bad behaviors. You can make the decisions. But what I want you to understand is watch this from the perspective of when you have bad behaviors, that is used as leverage. And that leverage pushes you into a network of working for greater power. I want you to become invincible to it by understanding how these operations worked. I also wanted him to share his experience of actually going to Syria, fighting ISIS. And we asked him the hard questions, because we know that ISIS is connected to Mossad, but we also know that elements of the Syrian factions were guarding the oil in Syria and are connected to Department of Defense funded operations. And he was part of those battles. And so we asked him the hard question as well as sharing his experience as well on that. And we also asked him around his questions around early Bitcoin investors, the ones that Satoshi Nakamoto handed over to, the CIA, Peter Todd, Gavin Andreessen. And this is not to add a judgment, it's to help you understand how infiltration operations may or may not work. I'm not making allegations. I'm not making anything. I'm just saying I want you to have the information so that you can have a warning between, the tension of sovereign individuals and the desire to leverage you, and how potentially the developer infiltrations work. And then when you watch my posts like hijacking Bitcoin, how you can realize and not fall for the narrative when alleged companies like Jane Street might use their media narrative, derivative complex, treasury complex, in order to try and get you to sell your Bitcoin. And so you can limit your exposure and how to avoid it. So that's everything I wanted to cover in depth on this topic, so that when everyone asks, I can give them the information. And I got a feeling we're going to see certain things in the court, or it's going to be protected, but we're going to be smarter either way.